All right, so I hope you enjoyed that webinar and video lesson on my TCCO trade. I made over $3,000. It was a really well thought out, well executed, well planned trade. From buying on the dip to selling near the top. I thought that I was actually going to play it too safe when I was selling, but as I always say, safety first. And as it turned out, that turned out to be the single best idea possible. Um, I give a webinar every single week to my Trading Challenge students. Every other week, it's a live trading webinar. So there is some pressure on me to do a live trade. That's what everyone comes to see and learn. But if you watch the first hour, from the beginning of that webinar, I said, look, I am thinking about buying TCCO, but it needs to prove to me that, it's worth it. I'm not just going to do a random trade just to do a trade for the webinar and have it not follow any rules. But by it didn't bottom at 570 the way I thought it would. But when it was down to the 550s, and I actually thought that it was going to fade, and then some buyer, right before I bought, seconds before I bought, somebody came in. I think it was like 3,900 shares that they wanted to buy at 560, and that told me that there was going to be some support there. And that told me, that could go to the sixes. And if it can go to the sixes, it could take out the day high, 645, probably the next day, which it did. And then it went to the 680s. So I didn't time it exactly, but good enough. And, that was a really easy trade that anybody could do. You don't need a special broker to find, shares to short or anything like that. You just need to know the rules, and you need to look for where technical support is. And you need to know that in the past, TCCO has been a runner. I'm sorry that the webinar was a little choppy. I was traveling. I was on the road in that one. So sometimes, you catch me at a bad time with choppy Wi-Fi. So it was a little fuzzy, but at least you could hear me narrating it, and you could see exactly why I bought it. And on my exits, I really thought that I was playing it too safe. I said this could keep going, but I made nearly $1 a share from my original buy alert, which is best case scenario for an impatient trader like me. If this keeps breaking out, I might rebuy, but it's choppy and has a habit of fading volume, so be careful. Don't chase this. The key on this trade for me was dip buying near multi-month support at 570. If this runs up enough, it might even be a good short. I don't like shorting contract winners, but it's always faded after 2-day spikes. And this turned out to be really great commentary. Here is my whole trade. I initially bought, it wasn't even 4,000 shares at 578. I put my limit at 580, and I thought that I got 578, but I actually got in at 572. Then I added after hours once it took out the intermediate resistance at 620, and then in the morning I sold at 666 because I'm evil. Overall, I made 13% on my money, and that was a really good amount. So again, you could buy 1,000 shares at 570, or 500 shares and make 500 or 1,000 bucks. You can make $1 a share on that overnight, and that is fantastic. And here is the chart. You can see in the past, in early September, 2-day spike and then downtrend, and then early December, 2-day spike and then downtrend, and that actually has bounced because it's they're in the encryption industry, which is becoming hot with the whole North Korea possible the interview hack and the hacks of all these celebrities. So cybersecurity, I think, is going to be hot. This might be a good stock to watch just because you see in the past that it can really fly in a day and spike up for a second day too. And that is what you should really look for. Don't look to trade it when it's here downtrending, here sideways. That's a waste of your time and money. Focus when it gets volatile and understand that in the past it has really spiked a ton, so it might do that again. And that is something phenomenal to really understand, that it could spike, and all you have to do is try and buy before it spikes, or even after it spikes, buy it near technical support like I did in the 570s. And then don't get greedy. That's the biggest thing. It had broken the day high of 645, 650. It was in new territory, 660, 670. I think the pre-market highs was like 680. It doesn't show it on the chart. One of my haters was like, there's no way you got 666. You're just making that up. It never hit that. Well, he didn't check pre-market. A lot of newbies criticize because they're so cocky. They think that they're right. They don't understand that I'm not going to lie about a trade. I alert every single trade in real time. How am I going to alert it when it's not trading at that price? But let the doubters doubt. He'll come around eventually. This was just a beautiful trade. Normally, I screw up. I make 10, 15, 20 cents a share somehow. And on this one, I made literally nearly $1 a share from my initial entry, which is just, I can't remember a well-executed trade like this. Not in the sense that I was so right, because it actually dropped the second day and the third day and the fourth day, but just in the sense that I bought it right near the lows of the time frame when I was looking to buy it, and I sold it right near the highs of the time frame. With EKSO, with ISCO, with LQMT, with pretty much every earnings winner I've ever played, I don't capture all the profits. With TCCO, I did about as good as I could have done. It was a small position because the volume was only 1 million shares. You got to watch it. I don't want to buy 50,000 shares and be, 5, 10% of the volume. It was a very small position, a speculative position, but it was a contract winner, and I used technical analysis to make my entries and exits even better. That's all you can do. That's all you can ask for on any single stock. So here's just some overall lessons from these earnings winners and contract winners. Don't just buy a stock that's breaking out technically. You need solid news to accompany any breakout. And in a similar line of thinking, don't just buy a stock with solid news. You need a technical breakout to accompany any news. It is a 1-2 punch. If you're missing one, you still might make money, but the odds of you making money are lower because you don't have as much reasoning. You don't have as many indicators, and different traders follow different indicators. So the more indicators you have on your side, the higher likelihood that other traders will be on your side too. And because if you work hard like me and you spot this stuff a little early rather than being like a newbie trader who's just like, what should I trade today? You can beat them. That's the beauty of penny stocks. That is the inefficiency. This is why penny stocks are easier than big companies. Plenty of big companies announce contracts all the time, and they don't run the way the penny stocks do because the news is disseminated mainstream. There is an informational inefficiency with penny stocks. Thank God. A lot of people say, Tim, don't you get ever pissed, that everyone hates penny stocks? No, it is a curse, but it is a gift and a curse. Without that hate, there would be more competition. There would be, algorithmic traders, like big hedge funds trading this stuff. I would have no chance. The reason why I do well, the reason why my top students do well is because we have a competitive advantage. We have an edge, and that is a beautiful thing. Also, don't scalp or aim to make less than 10 to 15 cents a share or like 1 to 2% on a trade. Aim big, okay? Aim for big setups where, you can see a clear breakout over the previous highs. Like, don't try and squeeze in a trade and say, oh, I have 10 minutes before class, let me make a quick trade. Oh, this stock is uptrending, let me try and make like 2 cents a share and then get out and make 50 bucks and feel better. Scalping is a path to ruin. Mark my words. I have tried scalping, okay? I've tried pretty much everything, and I've really refined my strategy to this strategy where, it's kind of frustrating to have to wait for the right plays. Sometimes you're not going to trade in a day, and I know a lot of people who want action say, Tim, I respect you, I appreciate it, but come on, man, give me something to play. The way that I wait for these plays, for the right setups, that gives me better odds of success. In an industry where 80, 90, 95% of traders lose, you need all the help you can get. So you can be speculative, okay? You don't have to necessarily wait for earnings winners or contract winners. Sometimes when a company announces a patent, it spikes a little and then it spikes a lot in the afternoon. The same kind of rules apply to any kind of positive news. But just understand that that's higher risk and lower odds of being a great trade. Almost all of my great trades have fit my framework to a T. It's not a coincidence. I've modeled my framework to really try and find the best trades, to really scope them out. So it's okay to bend the rules, but just understand that you are bending the rules. So don't expect greatness from something where you're bending the rules. And this is very difficult for people to understand. And then if you bend the rules too much, then you lose track of what the actual framework and what the actual rules are. And then you hurt yourself because now you're just kind of lost, and you think that you're only going to be right 50% of the time, when in fact you're only right 50% of the time, or maybe even less, because you're not following the specific framework. It's a very slippery slope. Once you veer away from buying earnings winners or buying contract winners, once you open Pandora's box and you just start buying any company with good news, as far too many traders do. And they wonder why these stocks don't run. They wonder why they don't get rich. They wonder why they think it's impossible to turn a few thousand into a few million. It is impossible to turn a few thousand into a few million if you have the wrong strategy, if you don't go in with specific plans and proper expectations. You can tell I'm a little passionate. I ain't reading no script. I'm reading real life here. I know what it takes to actually, make a lot of money, and for my students to make a lot of money. So just do me a favor and give me some of your trust. Also, I get this question a lot. This stock is down a little today. Do you think it could come back? Or this stock is down 30% on the day. I think it's a really good deal. Don't buy stocks that are red on the day or look to be on sale 30, 50, 70% off. It's not like a Black Friday sale at Bloomingdale's, okay? It's not the same exact sweater whether you save 50% or not. When a stock is down that much, it becomes a different entity. It has mutated, like at the end of a terrible movie by Ridley Scott called Prometheus. You don't want that mutation, okay? You want nice, predictable stocks. You want gimmies. And don't buy stocks that aren't volatile. You can analyze a company to death. You can analyze the product, say, oh, CNBC and all these shitty websites. Sorry, that's my second swear on the DVD. But it pisses me off that so many people say, buy what you know. Invest in Home Depot. Invest in Pepsi. That is not going to make you rich anytime soon. That time has come and gone, okay? That reminds me of like the people of my generation who invested in baseball cards because that worked in the 1940s and 50s for our parents. The same strategy that works in the 1940s, 50s, and 60s, buying these blue chip companies like American Express when it was first came out, that worked well into the 90s and 2000s. But now that everybody does it, there's no edge, there's no advantage. You're just a lemming, you like everybody else. Also, don't chase stocks after they spike a ton and you can't figure out where support / your risk is. I know a lot of people who were pissed at me for selling TCCO at 666. They said, come on, Tim, give it a chance. Let it run some more. It's a breakout over 2 days. And I said, no, I have my dollar a share profit. I bought on the dip. I have proper expectations. I'm not just going to hold this stock and hope for infinity. Hope is not a strategy, okay? You have to go in with a plan. If you achieve your goals, you get out. And if you hesitate on the initial plan and then you're watching it go up and up and up without you, don't give in to temptation and be like, I miss it. Now I got to get in. Because now it's kind of a vengeance trade for you and your mindset is not in the proper, you're not in the proper mindset. So don't chase stocks. Buy stocks at support or, when they break out above levels. There's nothing wrong with buying TCCO at 666 if you didn't get in on the dip because it is a breakout over the previous day. But once it fails to hold 650, 645, you got to get out and cut losses. I sent out a message. It was right when the market opened. There was still a chance that TCCO could spike a lot, but it wasn't going to. And it had failed to hold 650. And I was like, this stock is 630 right now. I would not be long on the failure to hold 650. And a lot of people ignored that and they're like, Tim, you're just being too safe. You're being too cautious. Yes, I am always too cautious. If I'm buying a stock, no matter what the news is, if it does not hold a support level that it should, the odds of it really going up in your favor are so slim. And all you're doing is opening yourself up to a big loss and possible disaster. And that is why 80, 90, 95% of traders lose money because they don't cut losses. They don't think about the consequences. They're not cautious and they're gunslingers. Don't be a gunslinger. follow the rules, and trust me, you will be rewarded.